One step that you guys are not doing when it comes to closing out your financials at the end of a period. So one thing that you cannot do going into the new year is carry bad data, bad financial data into the new year. So when I don't know if y'all even noticed this, but you get bank statements, financial statements for your credit cards, your investment accounts, your savings accounts. You get those statements for a reason. The purpose is to close the period out. So if we're looking at the prior month, November 1 through November 30th, you're supposed to close out the period every month before you move on to December 1. And I know for a fact y'all are not doing that because your balances don't match. That's the purpose of reconciling your total. You can't just pick a period throughout a 12-month time frame and say that this is the month that I want to do bookkeeping for. That ain't how numbers work. Balances roll forward, right? So you started off 2021 with an ending balance in all of your accounts. The numbers roll forward. And for each period, you have to close out the period to solidify that the data from the prior period, let's say November, for example, is reliable and solid before we move into December. How are y'all applying for things like ERTC? How y'all get SBA money and y'all have not a clue what we're talking about? Reconciling is super important. It makes sure that the data is reliable and good. It ensures that there's no fraud or duplication of your profits, your revenues, your expenses. It weeds out all of that foolishness that these systems can create errors with. So if you're not reconciling, for you DIYers, if you're not reconciling every period, it's highly possible that the data from the prior period is incorrect. So you want to make sure that by December 31, those numbers are reliable, clean, and reconciled before we move into January 2022.